Argentina's inflation hit 5,000% in 1989. Central Bank of Argentina, Annual Report, 1990. Leaders then pegged the peso to the dollar 1-for-1. Stability followed. Collapse came 10 years later. Argentina dollarized through the 1991 convertibility plan to crush hyperinflation. It delivered a decade of calm. The price was a rigid system vulnerable to shocks, but that rigidity proved fragile when external shocks hit. Hyperinflation hit Argentina in the late 1980s. Prices doubled every month by mid-1989. IMF Country Report No. 9066, 1990. Real wages fell 30% from 1988 to 1990. World Bank, 1992. President Carlos Menem took office in 1989. He appointed Domingo Cavallo as economy minister in 1991. Cavallo pushed the convertibility law. It fixed the peso at $1. The central bank backed each peso with dollar reserves. No printing money without dollars. Inflation plunged to 17.7% that year. By 1995, it sat at 3.4%. Central Bank of Argentina. Growth boomed. GDP rose 8% annually from 1991 to 1994. World Bank. Foreign cash flooded in. Capital inflows hit 5% of GDP yearly. IMF balance of payments. Banks expanded. Privatizations from 1991 to 2001 sold state firms for $20 billion. Argentine Ministry of Economy, 1996. This flooded coffers. It fueled consumption. Problems built up. The peg overvalued the peso. The peso could not weaken with the dollar. As U.S. rates fell in the mid-1990s, real interest rates in peso terms spiked. Carry trades pushed the real exchange rate higher. World Bank, 2003. Exports stalled. Unemployment climbed to 18% by 1995. INDEC. Recession hit in 1998. Brazil devalued its real next door. Argentina's trade surplus vanished. As exports fell and growth stalled, revenues dropped. Yet government spending stayed high. Public debt jumped from 35% of GDP in 1993 to 62% by 2001. IMF WEO. External debt reached $144 billion, reserves drained. In late 2001, the government froze bank accounts in the Corralito. Riots erupted. President Fernando de la Rua resigned. The peso devalued 75% overnight. GDP contracted 11% in 2001 and 10.9% in 2002. World Bank, 2003. Default followed on $93 billion in debt. Argentine Treasury, 2002. Critics blame fiscal mismanagement. They do not fault the dollar peg. Sound money drew $100 billion in investment from 1991 to 2001. IADB Economic and Social Progress Report, 2002. Primary deficits averaged 0.8% of GDP from 1993 to 1998. IMF Fiscal Monitor, OCT, 2001. That matches Panama's levels. Panama has held its dollar peg since 1904. A fiscally responsible government could have maintained the peg indefinitely. Argentina just needed to cut spending sooner. Provincial transfers ballooned after 1995. They rose 25% by 1999. INDEC. Political gridlock blocked reforms. Pork barrel outlays spiked 20% in election years. INDEC. Critics have a point there. Yet the peg funded deficits at first. Borrowing costs stayed low at 8% yields. Without it, rates would hit 20% like the 1980s. Central Bank of Argentina. Ecuador dollarized in 2000 after crisis. It has avoided devaluation since. World Bank, 2023. Panama thrives with 4% GDP growth yearly. World Bank, 2023. Argentina ran overall deficits at 3% of GDP in the 1990s. IMF Fiscal Monitor, OCT, 2001. Data favors pegs with discipline. Yet Argentina's external debt tripled. Reserves fell 50% from 1999 peaks. Central Bank of Argentina. The rigidity amplified shocks. President Javier Milei now eyes full dollarization. Inflation stands at 201% yearly. INDEC 2024. History suggests it curbs prices fast. Milei's current fiscal deficit runs at 2% of GDP. IMF WEO 2024. If it stays below 1.5%, dollarization could hold. If it exceeds 3%, reserves will drain within 24 months.